Good day, everyone. I'm Michael Grant, Senior Director of Sales at Applica, an AI company that uses deep learning to comprehend and extract data from any document. We help mortgage companies automate their most complex and variable mortgage documents to increase revenues without increasing staff, reduce errors and fraud, and improve the borrower experience. The competitive landscape in mortgage lending is clear. To win, you must be the lowest cost producer while offering the best customer experience. The path to achieve both of these goals is to become more digital. Software running at machine speed is much faster and less expensive than people reading and keying documents. Most companies took their first steps by offering digital front ends, which improve the customer experience but do nothing to change back offices that are still operating the same way they did in the 1990s. You still have underwriters sorting documents and manually keying data into LOS systems, which is why it still takes 40 days to close a loan. If you can bring your back office into the 21st century, you can take an average underwriter who's processing 2.5 loans per day and increase that number by 4 times. What would that do for your bottom line if you got a 400% productivity bump? Applica helps you achieve this by taking the documents that borrowers provide about their income, identity, agreement of sale, IRLA, etc., and converting the data into formats that can be published directly to APIs to eliminate the need for human staff to read, index, sort, and key the data. Ride-hailing services like Uber or Lyft use APIs to move data at machine speed. Once the customer types in their destination, data flows through APIs to map the route, select the driver, and confirm payment. All of this happens in seconds. Uber drives on the same roads with the same cars, but they used APIs to disrupt a 100-year-old industry simply by moving data more efficiently. With an average 40 days to close, the mortgage business is ripe for the same kind of disruption. And we want our customers to be the ones doing the disrupting by processing twice as many loans in half the time. So if we look at our robotic text automation platform, we see our first task is to recognize what kind of document is being presented. Is it a credit report or a bank statement? In the real world, we would integrate with you via APIs, but for this demo, I'll pull in a document from my local drive and the platform will recognize that it's an agreement of sale in the property documents category. The next step is where you teach the system to extract the data you need. Our system is so advanced, you interact with it in plain language. If you want Applica to extract the buyer's name, just type in that question. What is the buyer's name? We'll find the name in the document. You also need the seller's name? Just ask the question. When we ask these questions, we're not simply doing it for one document. We're creating an extraction schema that can be applied to any agreement of sale. And as I scroll through these different agreements of sale, all of which have different formats, I'm getting accurate answers to the same questions. And now that I've created my extraction schema, I want to check my work. I deploy the agreements of sales bot I just created and upload a contract to see it in action. I see all my results. And if I click on a specific data point, it'll take me right to the place in the document where I'm making the extraction. Each of these data elements I'm extracting are the results of the Q&A session I had when I first typed in the questions. So all I need to do now is give it a quick sanity check here before I'm ready to put it into production. I see the confidence scores are high, and when I check the extractions, I see that they're accurate. So I'm ready to go into production. And once the model is ready, your staff will interact with our software here in the validation station. If I look at my queues of to-dos, I can look at the agreements of sale that are awaiting my review. The key concept is that you're not looking to cut over to straight-through processing on day one. Your mortgage officers and underwriters stay involved, but instead of handling 100% of the documents manually, they'll validate a quarter or so of the documents in this interface, just to put an extra set of eyes on documents with lower confidence scores. The validation interface gives me the extractions in the column on the left and the document on the right, so I can easily confirm the accuracy. If I click on a particular data point, Like the buyer's agent address, I'm taken directly to the value in the document, which is highlighted for me, and I can confirm that the city of Marbury is correct. I can do the same with the street address or the broker's license number. If I scroll down to the purchase price, I can see that the model normalized the extraction to include 2 decimal points. If the extraction is not accurate, all I need to do is click the pencil to edit the field and type in the correct value. The icon changes to indicate I entered a manual value. 2 very important things happen. First, when I click Confirm All, the corrected values are ready for export. And my correction is fed back into the model, so it learns and does not make the same mistake again. The model is always learning, so over time your employees get fewer documents to validate. More throughput and shorter handling times. This will increase your capacity and revenue without having to hire more staff. And your times to close will be cut in half, delighting your customers and giving you a huge competitive advantage. But the most important thing is that once I've accurately extracted the information, I can export it via APIs or connectors to any of your systems. Your mortgage operations stay manual until you can convert your customers' documents into formats that look like this, to be consumed via APIs. That's what Applica does, better than any company in the world.